So here we are at the Power Options screen. And for those of you that are just getting started, of course, I encourage you to take advantage of the 4 steps here, going through the quick start guide, free flash tutorials, a variety of live webinars as we're doing now, that archived webinar section I mentioned to you, not only just the tools, but advanced options concepts, criteria, management techniques, and more. And of course, the free coaching sessions as well. As I mentioned, we support over 23 of the most commonly used options strategies. And I'm just going to answer Carolyn's question real quick here in 2 ways. Number one, I understand one thing that new investors don't necessarily love about Power Options is because it's a one-stop shop for basically all options investors of all walks of life, it can be overwhelming. But the key is to just set up the screens based on what you want and what applies to you. So I can just click on that Other Strategies tab. Here are all the strategies that we support on Power Options, all 23 plus, and I've got some already selected here. But let me go ahead and clear all of those out for the time being. And what are we going to have to add in? Well, we've got 50% of our audience doing covered calls and naked puts, sort of cousins of one another. We had 17% of our audience doing buying calls and buying puts. So let's add calls in. I'll also put in long straddles, for example. Maybe we're doing both. We had 17% of our audience doing credit spreads. So let's go ahead and add in bull put credit. Maybe even bear call credit if we think a correction is coming up as well. And let's just put in bull call debit also. And lastly, of course, I'm going to put in married puts just for this example, but normally what I'd have here still available is the custom spread tool, which allows me to build positions on the fly based on which structure I want. But for the moment, I'm going to add in married puts. All right, so I just did that, selected Save Configuration. Now the tab navigation up at the top has changed for the strategies I want. I showed a screenshot earlier of bulletproofing a married put position, radioactive trade, which is our preferred method of trading married puts. On Power Options, you have access to screen for the married puts that match our criteria discussed in the blueprint. You can see rollout opportunities based loosely on the 12 income methods for adjusting the positions that's discussed in the blueprint as well. But Carolyn's question is, what's the difference? Well, Power Options is a patented suite of search and analysis tools designed for self-directed investors. We give you the tools to find the positions that match your criteria, track, and manage the positions as well. The Fusion service at Radioactive Trading is only geared towards married puts. Don't have access to any of the other strategies. On the Fusion subscription, we show you different tools to further learn the ideas of the blueprint, enhanced concepts, tools to find the married puts that would match our criteria. You can follow our trades as well that Ernie and I post in our own portfolios that we post for the Fusion subscribers to track and manage them. But you don't have any outside tools. That's it. It's just related to the married puts, following our trades, finding new positions, that stock insurance tool to lock in gains, and lessons to help you master the techniques in the blueprint. Power Options is once you've graduated from that as a new blueprint owner, you want to be self-directed, find your trades, track your trades with the portfolio, evaluate the rollout opportunities on your own without so much of the guidance as on Fusion. Okay, so that's for Carolyn. Now, going back to Power Options. Let's say I wanted to enter a new covered call. How am I going to do that? Well, just as we showed, I'll go to the main covered call screen. I can click on covered call and go right to the covered calls homepage, or you can use the quick navigation links underneath. If I just wanted to see what currently matches the monthly picks of the day screen or the weekly picks of the day for covered calls that Ernie developed and tested historically with our tools, I could just click on those links directly. Those that match the criteria right now are Pinterest, Tilray, and AXNX. And you can see the quick return, downside protection, and over here is a nice link so you can see how Ernie developed these results, what worked and what didn't work, and how we ended up with this criteria that worked over various markets more consistently than other strategies. Or I can go directly into the search tool itself. So where you saw that screenshot that gives us the direct results and the data for the positions that match our default criteria. Now, we'd mentioned customization. Here's those screenshots you saw before, the ability to go ahead and change the criteria to match your specific needs based on your targets and your goals for any strategies. In addition to setting the stock technicals and stock fundamentals as well to match your portfolio size and more. Now, customization I had mentioned in any tool, whether you're just looking at the standard option chain, one of the search by symbol tools I mentioned, or here on the main search to look across the universe of options, you can click on add or remove columns. Anything you can filter by, you can add into the column view, change the sort to sort by that specific column view as well. Customization in addition to the criteria. Now, we offer those default criteria. I may have saved searches here from webinars or something that I was testing. Anytime you create a search, you can save it. You could have as many saved searches as you wanted. Why is that important? Well, the 50% of you that are doing covered calls, you might actually have 2 to 3 different approaches in your covered call structure. So what do I mean by that? You might be doing covered calls on dividend-paying stocks where you're selling maybe 40, 35 days out in time to generate a good 2 to 3% premium to enhance the dividend, but you're maybe looking a little bit out of the money. These might be core holdings in your account that you don't want to be assigned, or you're looking to create core holdings in your account. You want to augment that dividend-like income with out-of-the-money covered calls above the stock price without being assigned. At the same time, you might be taking a separate portion of your portfolio and generating income on a weekly basis on positions that look like they have a good probability of being assigned and still match a 1% return. Well, all of that's extraordinarily simple. And I would create 2 different screens to do that. So what do I want first? Well, let me go ahead and clear the filters. And I'm going to look very quickly for dividend-paying stocks that offer a good premium, but also match the trend that I want to see. Now, I'm not doing this shorter term. Stocks would pay a dividend that are in a good trend, probably have a lower volatility. We're not going to see a good weekly premium. So I'm going to go maybe 37 days out in time. Maybe I'll go out to March even in this case. But what I'll probably do is set all expirations, and I'll say, hey, anything that's 30 to 60 days out in time, any expiration, rather than just selecting one or the other. Now, I'm going to want some good downside protection, maybe 2 to 3%. What does that mean? I'm collecting at least 2 to 3% premium in the covered call position, so if the stock falls, I've got that hedge. And I don't want to be in the money. I want to be maybe 2 to 3% out of the money on these positions with a lower probability of being assigned. Probably want that probability of being assigned below 60. And yeah, I want to see some good liquidity. I want to see something that traded at least maybe 10 contracts a day, maybe has an open interest of at least 100. What else do I need? Very basic. Probably want a stock in an uptrend. Let's just simply look at a stock that's trading above its 20-day moving average. Now, I could set beta, look for things with a lower beta in this case for this dividend-paying stock, and we could use RSI if you want to make sure that it's below 60 or below 70, whatever your preference is. Average stock volume, yeah, I think I'm going to use that. Anytime you hover over a data column here, a filter, it gives you the pop-up definition. I see here the average stock volume is measured in thousands, so you know what I'm going to do? I'm only going to look for stocks that trade on average 750,000 shares per day. Now, let's go to the fundamentals. We're doing a covered call. I don't know your account size, and I don't need to. But if I was doing covered calls today, I'm probably not buying stocks that are above $150. But I want a dividend-paying stock with maybe a good market cap. So I'm also probably not trading something that's in the $2 to $3 range. So let's go 10 to 150. Probably want to see stocks that have some good earnings per share growth as well. And what do we want? A good dividend-paying stock. Let's put a minimum of 3% dividend. Maybe I just want mid-cap. It shows me here what I consider, hey, this is measured in millions. So I would look for something maybe greater than 2,000 to look for just mid and large cap. I'm going to put in 2,500 right there. I'm not going to worry about earnings because we're in an earnings season. But what did I do? I just said that I want to look 30 to 60 days out for lower volatility stocks, have a good volume, good market cap, good earnings per share growth, in my price range that I can afford for the stocks right now. It's trading in an uptrend. That's only about 6 or 7 criteria. Really about 8, but we've got the expiration showing me here what I did. I did put the downside protection, the range out of the money, so that's 3. Lower probability, it's 4. Liquidity, we'll count that as 5. Uptrend 6. Volume 7. And stock price 8, 9, so about 10 criteria. Is that enough? In the entire universe, all 4,500 plus optionable stocks, indexes, and ETFs, and the close to millions of options, different strike prices, just in calls, of course, we're in the covered calls. But just those as well, for weekly, standard, other expiration, I have narrowed down the entire universe of covered calls with just 5 to 10 common criteria that one would look for to only 11 potential results. I didn't put in a min and premium, but these all look pretty good. And these all have the downside protection that I want and maybe the percent return as well. Excuse me, folks, but most importantly, I am out of the money because I wanted these positions to potentially have a lower probability of being assigned. This would be my dividend covered calls. Western Digital, Tapestry, Seagate, Qualcomm's been really strong. Western Digital, other things I don't see. And you'd say, oh, well, why isn't Johnson & Johnson? Where's Boeing? Where's Avis or something like that? That another Heinz, Kraft. Where are those stocks that are common stocks that pay a dividend? Guess what? They don't match your criteria. You're not getting at least a 2% downside protection being 2% out of the money, or they're not in an uptrend. Or maybe their dividend's slightly below 3%. We know exactly why the ones are here that are here. We know exactly why the ones that aren't there that we might expect aren't here as well. Now I'm going to go ahead and save that, and we'll just call it my dividend CCs for 2020. And I could put in a brief description here of things that I enter, but let's just go ahead and save this search. Now I leave PowerOptions and I come back. I go into covered calls and I go into search tomorrow. This search is going to come up. It's going to remember the last saved search I was looking for, but I can always toggle back to any of the defaults, go to my other saved searches as well. What was the other one we wanted? Oh, we wanted In the Money Weekly. Okay, so let's start from scratch again. I'm going to clear out the filters. I can select all weeklies or all expirations to create my new search. Let's just go all expirations, and we'll go 2 to 9 days. Now let's go 2 to 10. Okay, so we're looking for next week, not something 2 days away. But if you wanted to look just for Friday, just put in your days of preference, 0 to 3 days to expiration. Okay, let's go 2 to 10. And what do we know about a weekly covered call that's slightly in the money? Well, we may still get a good premium, but we can't expect to see a 3, 4, 5% return if assigned. We're probably looking at around a minimum of 0.5. I still want a good downside protection. I want at least 0.5% downside protection for the next 10 or 15 days. I want to go in the money on this one to have a higher probability of assigned. So I'm going to tell it, let's go 1% in the money with our covered calls. Probability assigned, let's try greater than 70. Or you could screen by delta. If you wanted to put in a delta of 0.6, a delta of greater than 0.7 for the short call, you could do that also. Volume, yeah, let's keep the volume the same, 10 and 100, just as a basic guideline. And again, what else do I need? Well, I know what stocks I can afford. We're going to keep that same, maybe $10 to $150. Probably still want something that has an earnings per share growth, but let's skip that for now. And instead, let's just look for stocks that don't have an earnings between now and our expiration, because with this strategy, I don't want a sudden surprise of something falling 10, 15, 20% where stop order wouldn't even help me. The technicals, yeah, I'm going to want something in an uptrend here. I'm going to want to see that stock price above the SMA 20. I may even want to look for a positive MACD where the MACD has crossed the signal line by at least 1 day, and maybe that the MACD is actually positive above the difference line. Again, if you don't know what that is, just hover over here, and it gives you an idea and a definition of that concept. But again, yeah, 750,000 average shares per day. Is that enough? 28 total results. And I've got some duplicates. Beyond Meat is in here twice with a deep in the money covered call 9 days away, giving me a 1.5% return. Pinterest, Canopy Growth, CrowdStrike Holdings. Okay, so there's multiple ones here. Let's go ahead and scroll down. Let's narrow this down a little bit more. Let's change that to one result per security. Just a simple flick. Submit that search. Now we've narrowed the entire universe down. There's about 450, 480 stocks, indexes, and ETFs that offer weekly options. We've narrowed down our results in the entire universe of weekly options to just 19 that match our criteria, saving time with our research and analysis. Okay? And so then what can I do now? Well, again, I'll do that further research and analysis, maybe look at the stock chart, company information. I'll look at the profit and loss chart, run my what-if scenarios. I can look at the option chain for other strikes or delve into that research again for the stock or for the option. Let's just take a look at that option one real quick. It gives you all the data we have for this call option that we'd be selling. And down below, you have graphical interpretations of things such as option bid versus implied volatility since the option was released on the market. And we can change that. We can look at bid versus delta, stock price versus delta, option volume, implied volatility versus delta, and more. So you have a price range, essentially a price chart of the option over time when you use that research tool as well. Just a little bit extra, something a little bit fun there to delve deeper into it. Here's my search. What are we going to do now? I'm going to save it again. Oh, it's not going to be my dividend covered calls for 2020. We created something different. This is weekly CCs from Jan 15 webinar. Personally, if I was doing weekly covered calls, I would just stick with the picks of the day myself because Ernie has tested those. But I'm going to show that in just a moment too. Carolyn asked another question. Pick of the day, if we can see when the trade was done, it will be great. Well, we don't honestly track the picks of the day because we're not opening trades every day. But if you click on that link, Carolyn, to see how we develop the trades, you have the information here and further detail here of the timing was based on the trades we're opening. So this is updated yesterday at 1 o'clock. So today at 1 o'clock, these are going to update, and that would be the time that Ernie would have entered these weekly picks of the day for the covered calls based on his testing. And again, just click that link, see how we develop these results. And you'll get the full description there of Ernie's testing, how he entered it, allocation, and a little bit more. Okay, so just answer that question. But another fun thing that we have here that's available, might not be available at your broker, probably isn't, and even on the trial, you have quick access to it. So now that I've saved my search, I want to check something. Let's go to the back test. And I'm going to go to Smart History, and this is using that historical search. And I'm going to go back to December, let's say the day after expiration, standard marked there by the asterisk, Monday following standard expiration, December 23rd, and let's just take a look at the weekly picks of the day. This is going to show us what trades would have matched that criteria based on the close of business number using the weekly picks of the day screen. And it's not going to show the top 2 or 3 that we just saw in that quick view. It's going to show me a listing of them. Okay, so there we go. You had about 8 positions here, 6 positions, Rite Aid, Apache. There's Chemours again, Tesla. Now why am I doing this? Because I want to quickly go to calculate group results, and this might take a quick moment to run. Oh, it's not that bad. But what does this show me? This shows me without any management involved. The top 2 positions there would have had a return of 0.1 and 0.9%, but all 6 positions would have ended up 4 out of 6, 67% success rate with about an average of a 0 return. This is why it's important not only to see how your test would have performed or other default searches would have performed using the historical tools, which are available during the trial going back 2 months, but it's one of the extras on the subscriptions that you can upgrade to from the 20-minute delayed. But in general, as I mentioned for Carolyn, if you go to see how we use these results, Ernie would show you that he typically only selected the top 2 for the weekly and monthly picks of the day. So this would have been fairly successful. But out of curiosity, let's do that again. Let's go to December 23rd once more. Would my weekly covered call screen have been effective? Let's see what criteria would have matched that weekly covered calls from January 15th. What stocks and covered calls would have matched that? Here we go. We've got some ETFs. Ooh, the Brazil Bull 3 times ETF, Direxion 3 times ETF. I didn't limit ETFs out. I could have done that in the list field. I could have told it not to show me any 2 times, 3 times in ETFs, inverse ETFs or more. But these are both bulls, so we'll keep them. Now I have 13 results. Let's see how they would have performed during that first week of December 23rd. Not so good. 5 out of 9, only 56% for successful, and the average return was below 0.1. And like the weekly picks of the day, if I only took the top 2, I'd be a loss of 0.9%. So although that's the criteria I would have looked for, that's why I mentioned that I probably just would have stuck with the weekly picks of the day, because they have been tested and shown over time to work across different markets more than other criteria. But I did want to show you 2 things. Number 1, going back to the search, how simple it is. Although you might feel inundated, overwhelmed, just take the top 5 or 6 criteria that you're considering for a strategy, and that will likely narrow down your results and help you save time with your research and analysis. Then you can compare it, potentially, whether you're paper trading or not, against our default searches and our other screens as well. And this is the same process I would go through. For those of you doing long calls, you can use our defaults. We have defaults using the Bollinger Band strategy, and there's an article there that discusses what that is. You can set the criteria for implied volatility range, expiration, IV over HV, same things, similar that we saw for the covered call. You don't see a return though, but the technical fields, the fundamental fields are all the same for each strategy. You have that ability to isolate it to just the underlying securities you want, whether you're trading long calls or long puts, whether you're trading the covered calls or the naked puts. Hey, even the credit spread searches, the bull puts or the bear calls, still have the same fundamental and criteria, but some other things are a little bit different here. A maximum risk field, minimum net credit, return, annualized return, strike difference, something we don't see in covered calls, naked puts, buying calls and buying puts. Bid-ask spreads, you can limit the bid-ask spread by monetary or percentage, of course that probability, delta ratios between the 2 options, and much more. What you'll see change is that options criteria. You still have the same access for the fundamentals and technicals, same flexibility to customize your column view or your searches, detailed research and analysis, and of course tracking and managing positions with the portfolio to evaluate those rollout opportunities and more. As a quick view, what we saw earlier, I showed you some quick screenshots of when alerts triggered here, whether it's on my covered call, my credit spread, straddles, whatever position you're tracking. Here I've got that alert triggered. What am I going to do? I'm going to go to position actions and then position analysis. It has to be entered in the portfolio to see this. You can't go to the position analysis tab straight away. Here's that breakdown I was talking about for the position. My current liquidation value is 15% after 43 days. That probably met my goals. I probably would just liquidate this position. But if there's earnings coming up, and I think there's going to be the potential for further growth, they're going to have strong earnings, what can I do? Well, I can evaluate some of those rollout opportunities of just generating income to cancel all of the risk here, using that put as a second asset to bulletproof the position, as we saw before, and still leave the upside open going into earnings. Great to see it numerically. I want to see it graphically. Go to Simulate Trade. There's my before and after picture. Again, could liquidate right now for 15% gain. Still carrying a risk of 7.2% going into earnings. I could cancel all of that risk, bulletproof the position, leave the upside open heading into earnings season. Liquidating now or doing that sounds really attractive to me for these positions. But again, if you're just trading a covered call, stock stayed where it was when you entered it or it's moved up above your short call strike price, you could evaluate those rollout opportunities of buying to close your current position and rolling to a new call. You'd see the new percent return if assigned, annualized percent return if assigned, new probability above your short call position, and then you could go ahead, go to simulate trade and see the before and after picture of your covered call, your credit spread, adjustments to an iron condor, just a long call even, converting it to a calendar or moving it up in price. How would that adjust your risk, your exposure, but still keep your return? Naked puts, rolling just the naked put itself, or allowing you to be assigned on the stock and then converting it to a covered call. What would your potential return be? What would the before and after look like if you allowed that to happen? All at your fingertips, all with a few simple clicks once you've got that position into the portfolio. So once again, we just wanted to talk about all of that there, but once again, what do we love as options investors? Ability to select the options that match our goals and tolerance. Strike difference, in the money, out of the money, return, liquidity, Greeks, probability, while at the same time on the same screen knowing we're only seeing stocks in addition to that match our sentiment for the strategy that we're using and our goals for our portfolio. Right away, quick links to further research the stock, link to news. Hey, you might already have that, I'm sure, to be able to do that. But then dig deeper into the option, research the option. You can take a look at those historical price charts, and you can run what-if scenarios on the profit and loss chart field as well. Ease of tracking with the portfolio, managing the positions, being able to see it as a linked position and as a strategy position. The gain and loss right now on both legs or multi-legs in that strategy, rather than seeing them at different places in your broker, and comparing the current liquidation value versus the future expiration value. Setting alerts, and yes, on some of those subscription levels, the 20-minute delayed service that we showed and beyond, you can request to have the alerts in your portfolio emailed to you. So you can see right away if alerts triggered, and if you want to go to the portfolio, take action, evaluate those rollout opportunities, see what you want to do right now. And those adjustments, the rollout opportunities, the math is done for you if they're available, and then you can see them side by side with the before and after picture as well. And that's what options investors tell me they love about PowerOptions. The flexibility, the customization, and efficiency of the search tool once they get into it. But we offer that education to not only help you with the strategies, but how to use the tools, including personal coaching sessions, one-on-one sessions over the phone, or even on a webinar format as we're doing here. You can request that also. Further research and analysis, ease of tracking the positions, evaluations, and all of the education at your fingertips. So again, how much would you consider it would cost for stock selection service, detailed options analysis with historical testing, other market news, tools for adjusting positions, evaluating rollouts, and seeing a side-by-side picture, and a vast amount of education as well. And then you add all that up, and it's probably going to be less than the monthly subscription fee that you can get with PowerOptions. So again, if you have any questions, email me at any time. Send me an email to support@powerop.com. You can also call us during market hours, of course, at 302-992-7971. I'm likely not going to be available for the next hour. I think it's lunchtime. I think I'm going to go enjoy some lunch for maybe 35, 40 minutes or so. But then I'll be back here to work on other presentations for later this week as well. Ladies and gentlemen, I hope you got a lot of useful insight on this presentation today about how customers tell me that they use and what features they love on PowerOptions and how it can be used for your account and for your trading as well. I hope to see you soon on one of our next live webinar presentations. I'll let you know when this archive is available. Take care, everyone, and have a good night.